You know, that's a really good question. And I get this question every single day. And by the way, I've been practicing 24 years, and that's always a question. And a lot of my clients, even some of my most sophisticated clients, just assume their claim is worth essentially adding up the number of future months and the monthly benefit and coming out with the total. For example, if your claim is worth $20,000 per month and it's going to be paid for 120 months, it comes out to $2,400,000. But when people ask how much their claim is worth, often it's in connection with seeking a buyout or responding to a lump sum buyout proposal from the insurance company. Often, the insurance company will realize that you're going to be disabled for a very long time, and they'll engage in a Monty Hall exercise where they'll say, let's make a deal. Let's pay you a lump sum right now. Let's buy out your claim. And it sounds great because they're going to give you a great big lump sum of money, and you can no longer have to submit attending physician statements. You can be done with submitting personal statements and submitting your tax returns. It sounds like a great deal. You both go your separate ways. But then when you really look at the fine print, and it's such a good question, because your claim isn't worth, if let's say you get $20,000 a month, 120 months, that's 10 years. It's not worth $400,000 in today's dollars. If they were to pay you, for example, $20,000 a month times 120 months, you would actually end up with a windfall. And that's because of the time value of money. You really have to take a look at what the interest rates. And the question is, how much would I have to invest today, removing the $20,000 a month for 120 months to come to zero? So, prior to this question being asked, I did a little math, and this is how most insurance companies will view it. And of course, there's some wiggle room here, and you'll see. So, as we already said, $20,000 a month for 120 months, that's going to come to $2,400,000. However, what you have to do is take a look at the current interest rate. And that interest rate is often used by some of the major carriers. Moody's AAA bond rate. And right now it's really very high. It's 4.68%. And I did some back of the envelope calculations, and I found out that the total value of a claim worth $20,000 a month for 120 months, that's only going to be worth about $1,897,000. Essentially, you're going to take a $500,000 bath. But there's other things to consider too, because the insurance companies will never buy you out for 100% of the value. And that's because of factors like you could get hit by the proverbial bus, or you might improve to the point where you can return to work. So what they're going to do is they're going to offer you 65% to 72%, and maybe sometimes more, maybe sometimes less, of the present value of the future benefit. So off of that $1,900,000, they may only offer you $1,233,000 to buy out the claim. Now you're looking at a $1,200,000 drop. I mean, that's significant, right? But it gets better, because sometimes these benefits are taxable. So the IRS, and by the way, it's just sometimes these benefits are taxable. The IRS will look at it as though you've had an income of $1,200,000 in a year, and you're going to have to pay to the IRS 30 to 33% of that value. Now you're below $1 million. So you started off with $2,400,000 into the future, and now you're below $1 million. So it's really important to understand the value of your claim, not in tomorrow's dollars, but in today's dollars. And that's particularly true if the carrier is going to offer you a buyout. So if you got any questions, I'd be happy to answer. That's a good question. And my answer is you should not. And I'll tell you why. I read about probably 40 to 50 claim files a year. And that's over the past 24 years. I've read more than 1,000 claim files from long-term disability insurance carriers. Inevitably, the long-term disability insurance carriers like Unum, like Cigna, like New York Life, like Hartford or Principal, when you approach the carrier for a buyout of their claim, it's actually considered a red flag, like an official red flag. It's something that they have to report, and they might just launch an investigation into your claim based on that and maybe a couple of other factors. So if you approach a carrier about a reasonable buyout of your claim, you might significantly prejudice your rights to ongoing benefits. So if you're thinking about approaching a carrier for a buyout of your claim, you better do it very politically and at a time that's appropriate to approach them for a buyout. And also know that if you're approaching them for a buyout, before you do that, make sure it's a number you're probably going to be interested in. So my response is don't approach a carrier willy-nilly and say, hey, buy out my claim. Because the carrier is going to think, he or she is all better and they want a bonus and they're going to go back to work. So just don't do it except in some very limited and narrow circumstances. If you have a question about what these limited and narrow circumstances are, give me a call. I'd be happy to discuss it with you. This is a pretty good situation. When an insurance carrier approaches you for a buyout of your claim, it means that they've already thoroughly vetted your claim. They believe you're going to be disabled for a long time. It's not worth their effort any longer administering your claim. It's going to cost them money just to pay you every month, and they're looking to make a deal. And so you should consider it. But again, the same rules apply to what do you think the value of your claim is going to be? Because brother or sister, it ain't going to be that much. And unless you have some kind of upcoming financial obligation, or you're just sick of dealing with the carriers and can afford to let go of a lot of money, you may not be interested to buy out. But when a carrier approaches you or solicits you for a lump sum payment of your long-term disability claim, my advice is to listen and ask them, what's the number? How much do you want to pay me? Often when they approach you with a buyout of your claim, the carriers have very little wiggle room. They've been given a small margin within which they're allowed to settle your claim. So there's not going to be a lot of negotiations going on there. It's more of a take it or leave it kind of situation. So if they approach you with a solicitation to buy out your claim, congratulations. Go speak to your financial planner and see if it's in your best interest to accept it. Well, I think by that question, people mean what are they able to work? Are they able to volunteer? Are they able to go to work in another occupation? And the answer is invariably the same. The more stuff you do while you're disabled, the greater the insurance company is going to scrutinize your claim. And whatever you do while you're disabled, let's say it's a volunteer job, the duties of that volunteer job, let's say you want to work in a soup line, You want to be a productive person. You want to volunteer at a church or your temple. Make sure the duties that you do volunteer-wise are not consistent with your stated restrictions and limitations. And let me make that clear. So if you say to the insurance company, pay me, I'm disabled, I have a horrible back, there's hardware all up and down my spine, I can't bend over, but then you volunteer for a charitable organization and you wash cars for a charitable organization at a local fundraiser and you're bending over, well, that's going to cause a lot of problems. Also, a lot of it depends on the definition of disability in your policy. Some policies say we'll pay you if you can't perform your own occupation, but other policies will say ultimately, we're not going to pay you if you can perform any occupation for which you're reasonably suited by age, training, or experience. So any kind of activity you engage in, the insurance company is going to look at and say, this person was once a fantastic physician, but now, he or she can bend over and write. He or she could be a nurse. And they should really go back to it. So my advice to people who have a valuable long-term disability claim and they're interested in keeping it, and this is very sad, is go into a hole and don't do any volunteer work. And if you want to do volunteer work or you want to do some kind of occupation that's different from your previous occupation, you really need to seek out competent legal counsel to explain to you what you can and you can't do. Like me. So, be careful. This is the easiest question. Stay the heck off of social media. All right? I mean, is that Instagram post worth $1 million in future benefits? Is that Facebook group you belong to really worth $1 million in future benefits? Pick up the phone, call your friends, stay off of social media. Any images on social media, not only that you post, but your friends post about you, can easily be misinterpreted by the insurance company. By being on social media, you are essentially opening your doors to the insurance company and saying, yeah, come on in, look at my life, investigate me all you want. And it's only a few clicks away. In fact, I know some claims representatives on a personal level, and the first thing they do when they get a claim is they find that person's name on social media and find out, the last time they were in a tug of war at a picnic, or they went on their last ski vacation, and, they'll use it against you. So my advice to people when they have a long-term disability policy and they have a claim is stay the heck off of social media. It's one of the least expensive things you can do to protect your claim. Otherwise, you might have to call me and if you have a problem. So no Facebook, no Instagram, no Twitter, just lay low.